Biki Pramam Hiraldadia. Joining us on the show today is Nithin Kamath, founder and CEO of Zerodha, to talk to us about more in terms of the report that SEBI has released with regards to the equity F&O segment as well. Welcome to the show, Nithin.
Thanks for having me on this. Yeah.
Always a pleasure. Nithin, clearly in terms of the study, this is something which, probably anecdotally everyone knows about it, but actually it's actually in black and white now, wherein 9 out of 10 F&O traders do lose money, and that's what the report furnishes. What do you make of this?
No, I mean, see, the thing is, this is something we've been publicly saying as a business for a while now, is that a very tiny portion of our customers actually profit from trading very actively, be it F&O trading or be it intraday stock trading. And I've also said it that it's very, the odds are very similar in other walks of life, which require a lot of skill and some luck to succeed. Like, if you want to say, become a good actor, or like a popular actor who makes money, or you want to become a sportsman, or you want to become a musician, or you want to even build a business, the odds of success is actually much lesser, right? As in, maybe 1 in 1,000 really hit it out of the park of sorts. And so while 1 out of 10 make 10 out of 100 kind of are in the money, but the people who make more than fixed deposit kind of returns trading the market is more 1 out of 100. It's more 1% of sorts. Because if you're coming to the stock markets, you are expecting to do at least better than like a bank fixed deposit return, right? As in, it's stock markets are the hardest place in the world to make easy money. It just convinces most people that it is otherwise, and it's amazing that the regulator is setting the expectations right. Which was, I think, which is actually good for everyone.
Right. And absolutely, rightly pointed out, but clearly if you see one of the numbers which says that the average loss of a loss maker is over 15 times the average profit of a profit maker, right? So is that always been the scenario in the last couple of years?
Yeah. No, it's not just a couple of years. I think it's always been like this, in the stock markets, right? It's like I said, it's a few people who kind of really hit out of the park. So if you were to look at the top 1% and not really the top 10%, that the profits made versus loss made, it would seem more, I think the profit made would be more than the loss made. But if you kind of compare the top 10%, now, as I said, these top 10%, there are a lot of people who have just broken even, they're just in the money of sorts. And that's why I think, that data point may be looking a little skewed. But I personally think the right way to look at this is, what did the top 1% who made more than bank fixed deposit returns make, and then compare it to people who didn't make trading the markets.
Right. And overall, if you see in terms of the demography, right, clearly the participation of individual traders in that age group of, say, 30 to 40, that's highest across the group in FY22 itself. So what is that indicating? Is it mainly that the risk-taking appetite of this age group is something which is actually propelling them towards getting into the F&O side of business?
No, I think, it's just not F&O. If you kind of look at this across the board, across, like even our, equity delivery business, actually, even if you were to pick up Swiggy and Zomato's business, I think, in the last 3 or 4 years, you'll see that the most activity and contribution is really coming from the 30 to 40-year-olds in India, right? Because for most, this is the audience which is making money. This is the audience which is also, averse to technology. So in the sense, they're more tech first than what it was in the past. So I think the reason that 30 to 40-year-old, you're seeing the activity more is because of that. Everyone's got access to technology. They're making some money. They're looking. They're in terms of their choices of what they want to do with money. They're a little more aggressive of sorts than the generations in the past. Because if you were to say, I've been in this business for a while now. So if you were to go to the mid 2000, the average age of someone who participated in the market was probably upwards of 40. Today, if you look at it, it's probably closer to 30. So it's just we are blessed as a country to have a demographic of younger population. So I think it's actually a good thing if you look at it like that, that way.
Right. And overall, are we seeing a shift happening from futures to options, taking into consideration the margin structure as well? Because I think it's 1.35 lakhs with regards versus nil in terms of options. So has that shift also been happening?
Yeah, I think over the last 4-5 years, especially, the margin requirements are going up. So it's becoming like for people who are just trying to enter the F&O markets, the entry barriers are quite high. If you want to kind of trade futures or short options, and if you want to buy options, you can actually start at a much lower kind of entry barrier. So which is why I think you're seeing a lot of a lot of volumes kind of move from futures to options primarily in this.
Right. And overall, another trend that I was witnessing over here, Nithin, was clearly the losses that we are seeing between tier 1 or tier 2, tier 3 cities. It's higher in tier 2, tier 3 cities, right? So would it be right to say that it's mainly lack of education, reach, or quality of advisors? And that's one of the reasons why losses in that age group category, but in tier 3, tier 2, tier 3 is way higher?
I mean, it's like I said, it'll be selection bias, in the sense to come to any conclusion just based on this data point. Also, the thing is, a lot of these tier 2, tier 3 cities, right? As in today, the way every platform in the country kind of maps user in terms of tier 2, tier 3 is based on their address proof, right? Now, the thing about the younger generation is, a lot of these people move cities. You might have studied in a tier 2, 2 city, and then you come to Bombay or Bangalore for work. So while if I look at your activity, it might say you're from tier 2, but you are actually trading out of like a tier 1. That data point kind of maybe a little skewed because of how people kind of move around, and the address proof maybe kind of skews the data there. But other than that, I don't, like I said, I don't think the business in India is advisory led. So it's not that someone sitting in a metro is getting access to some advisor which a person in tier 2 or tier 3 can't get, right? Because everything is digital. Everyone's consuming content digitally today, and so I don't know. I mean, I don't know how to make out of that data point.
But overall, I think Zerodha has also done a study which is similar to this, right? Any deviation you see between what Zerodha found in terms of these kind of anecdotal numbers versus what SEBI is reporting?
No, I mean, see, our report is a subset of SEBI's report, so it's all very similar.
And overall, from here on, even in terms of if you see the number of active F&O traders, that's seeing a whopping 500% jump as well. So what is that indicating for a market like ours?
So, see, the thing is, the last 2 years, the greed was at its peak, not just in India, across the world. So this 500% jump that you're seeing is just not in India. You go to the US, there was, like maybe more than 500% jump in the US, actually, for a market that's as developed as the US, right? So, and every time there are these kind of, incidents that see a big blip up, right? As in, there's usually a mean reversion. And we are already seeing that this year. So, if you were to compare last year to this year, you would hardly see any jump. Potentially you would have seen a degrowth in terms of, total number of active F&O traders, who traded last year versus this financial year. Yeah, I mean, I think that first blip was, a lot of these people who are fence sitters who thought about capital markets who jumped in. But I don't think that momentum and the markets can't grow at that speed. And I think we've already hit a plateau in terms of potential target or market size for F&O traders in the country.
Right. And very lastly, overall, in terms of the T+1 settlement that kicks in from today as well. So, I mean, it's an important day for the markets from that perspective. What would you have to say on that? Because clearly, yes, a lot of advantages come in specifically from a liquidity perspective. And I think we will be the first markets after China to actually fully have this in place, versus China is really partial right now. What would you have to say to that as compared to other developing or developed economies who've not really been able to get such a system in place?
Yeah, no, I mean, I think it's kudos to India and the regulators, who kind of pressed on innovation in terms of wherever there is a way to be efficient as a business, as in, does it really incrementally add significant amounts of liquidity? Maybe not, but if there is innovation that can help improve the efficiency, I think we should all. I think the regulators are kind of leading leading this. So not just in terms of the settlement cycle, be it in terms of retail investor safety, be it in terms of the overall infrastructure. For example, this whole concept of a demat account, which is kind of ring fence from any broker risk, right? In a country like the US, if you buy a stock and the broker goes down, your stock potentially can go down with the broker. Like in India, it doesn't work like that, right? As in your stocks sit in your demat account, ring fence from a broker. So, I mean, I think I've said this publicly many times, that I think India is way ahead of most developed economies when it comes to our capital market infrastructure and general safety, and when it comes to retail investors.
Yeah, absolutely. In fact, in terms of UPI as well, we're the first ones to actually have a UPI in place, right?
Yeah.
So, and overall, Nithin, we are pretty much close to, in terms of the budget, a lot of expectations coming in around as well. From a market perspective, anything that you think you're anticipating or you think should be announced, what is your expectation?
I mean, no, I usually don't get into this with any expectation. I mean, everyone would want lower taxes, etc. But I mean, a government is also has to do what's right for the country overall. So
Absolutely.
no, I don't really have any expectations of sorts.
All right. Thank you so much for speaking to us at BQ Prime. Stay safe and speak to you soon again.
Thanks a lot. Good day.
Thank